When people imagine Rome's collapse, they usually think of wars, barbarian invasions, and political intrigue. But the truth is, an empire doesn't fall only from external attacks. It falls apart from the inside, and the thing that eats it away the most is money. The events that brought Rome down weren't just invasions. It was also the collapse of its currency. And believe me, what happened back then is still exactly the same today. Let's talk about it in a simpler way. For centuries, Rome's economy rested on the silver denarius. From soldiers' salaries to everyday market shopping, everything was paid with it. It was both metal and a symbol of trust. As long as Rome stayed strong, people trusted its money too. But keeping an empire alive is expensive. Legions, roads, wars. Costs kept rising, taxes weren't enough anymore. And the emperors turned to an old trick, thinking no one will notice. They reduced the silver inside the coin. The silver content, which was around 95% at the beginning, dropped to 50% and later even below 5%. The coin still looked the same, but it was hollowed out from the inside. Once people noticed this, prices rose and inflation exploded. Soldiers demanded higher pay, merchants stopped accepting the devalued coins, and cities went back to bartering, and everything slipped into a vicious cycle. The more the currency lost value, the more they printed, and the more they printed, the more it lost value. This is how the great crisis of the 3rd century emerged. Rome was trapped in chaos for almost 50 years. Civil wars, plague, invasions. But behind all of it was a collapsed economy and a collapsed currency. Even though Diocletian tried to say enough and attempted to control prices by law, once the money loses value, no law can hold the price still. The black market exploded, trade collapsed. Eventually, the denarius was abandoned completely. Its place was taken by the solidus, a pure gold coin that brought some stability, but it was too late. The Western Roman Empire was already on the path to collapse. The lesson from this story is crystal clear. When money loses its value, society is doomed to lose as well. This was never just Rome's problem. Germany lived the same thing in the 1920s. Zimbabwe lived it in the 2000s. And in the modern world, no country is as safe as we think. Even today, paper money is no longer tied to gold. It's all based on trust. And governments saying, we'll borrow a bit more, we'll print a bit more money, has become incredibly easy. But the price is always paid by ordinary people, wage workers, retirees, savers. As individuals, the lessons we must learn are simple but important. Inflation is not an accident. It is a political outcome. Real wealth is found in assets that keep their value during turbulent times, and stability should never be assumed to last forever. Rome's collapse shows us something important. Everything first deteriorates slowly, and then falls apart all at once. And when money collapses, every system built on it collapses too. If you like this perspective, don't forget to follow for more. History always knows how to show us what's really going on.